Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. There are so many things, especially nowadays, that you can invest into, from stocks to precious metals to real estate to cryptocurrency. There's just so many. And the thing about this is all of them affect each other. So when stock markets are high, that usually pushes precious metals low because people are investing into more than one thing, right? People diversify. So if stocks are looking attractive, people take their money out of precious metals and dump it into stocks. And it comes vice versa as well. When stocks are low and it's not doing much, people take their money out of stocks and transfer it into precious metals. So you can see how there's this full circle effect. And right now, this article is talking about how takedowns are not diminishing gold and silver investment interest, right? People are actually bullish on it for once. There's a lot of weak hands, short sellers, people that at the sign of any type of distress or any possible dip, they leave. And this is showing that even with things that would normally take down gold and silver prices, there is support, there's stability. And I've talked about this in the past, that precious metals shouldn't be based off of speculation. They should simply be based off of supply and demand factors. People speculating on gold and silver shouldn't be able to change the price, because gold and silver is an intrinsic investment. It's not like Bitcoin that is solely based off of speculation. So hopefully you can see by the end of this video why gold and silver have so much potential, and really the amount of support that it has in stability, right? Not many things have stability like precious metals do. So with that said, the link to this article will be in the description if you want to check it out yourself. I always say do your homework. So as happened a week ago, gold and silver prices were taken down quite sharply on the futures exchanges yet again at one point last week. But this does not appear to have put off those investors who would see the major precious metals advance. General equities still remain mixed to stronger, led by the tech stocks on the NASDAQ, but some of these appear enormously overvalued in a bursting bubble, notably for Tesla, which is now by far the biggest global automaker by market capitalization, could have dire consequences for those private investors who have been carried away by the tech stock euphoria. If, or rather when, the bubble bursts for Tesla, which has achieved its position on market hype, powered by a charismatic founder, rather than on profits, or even potential profits, many years hence, other overpriced tech stocks may well be brought down to earth with it. So he's saying that Tesla has been based off of hype, it's been based off of speculation. It reminds me of the Bitcoin rush, right? Bitcoin rushing to $20,000 without any type of reason why, just based off of people thinking it's worth much more than it is, or speculating. It really can't it gets exposed sooner than later, right? It definitely shows itself. The true colors come out eventually, and that's what he's talking about when he says the bubble will burst. So anyways, let's go on to see how this affects gold and silver. So gold and silver has been resilient despite efforts to crash their prices. See, things, like I said in the beginning of the video, can and will affect precious metals prices. So despite effort to crash their prices, they have not been yet to be able to break out of any length of time above the $1,810 level for gold and around $19.50 for silver. But we think it is only a matter of short time before these price levels are breached significantly. And keyword is short time. A new equities crash could well be the trigger for such an event. Equities, something that a lot of people overlook, swept under the rug. I wonder why. Bill Bonner's howling mad comment from another one of my recent articles really sets out the crazy position which U.S. retail investors have placed themselves. The last quarter was the best for the Dow Jones in 33 years, but for the economy, it was the worst quarter in history. Think about that. And if the Dow is mad, then the NASDAQ is probably worse, with a ridiculous Tesla stock price gain leading the charge to higher equity index levels. Something is thus hugely amiss in American equity markets, take the following graphic published by Zero Hedge last week, which shows that in daytime trading, the S&P 500 has actually lost ground over the past few weeks, but overall index is up substantially purely due to overnight trading. So, as Zero Hedge points out, over the period shown, the S&P 500 has risen 314 points, but virtually all of its increase has occurred outside regular trading hours. There's definitely something eerie here, perhaps suggesting that all gains have occurred outside normal markets hours, presumably fueled by the plethora of home-based day traders carried away on the market euphoria following the erroneous suggestion that markets can only go up. See, it's based solely off of these individual investors that are basing this off of hype. There's no reason why. There's nothing happening more than just people thinking it's only going to go up, right? This is a lot of new investors, people like Tesla. Oh, Tesla's going to explode, almost like Bitcoin. It reminds me of Bitcoin, the same type of thing, same type of feel, and it's going to end the same type of way as well. Professional market traders must be licking their lips, as well as they will continually be able to take trading profits while the madness persists. When the market crash happens, and it will, many individual investors are going to get their fingers burnt, like Bitcoin. While most of the professionals will probably get out early or in good time, was it ever thus? And that's true. You know, a lot of people are going to be selling like Bitcoin around $20,000 like I did. A lot of people are going to be holding on thinking it can only go up higher. It's only going to go up higher. Tesla can only go, it's Elon Musk. So anyways, meanwhile, we expect gold and silver to move onwards and upwards. And I love how this article can bring in and intertwine stock markets, kind of give some backstory, and also intertwine it with how it's affecting precious metals. That's why I shared this article today. So meanwhile, we expect gold and silver to move onwards and upwards, driven in part by the excesses of the U.S. Fed in trying to prevent an overall economic collapse. And how are they doing that, Silver Slayer? Well, they're flooding the markets with paper money, with fiat currency. Interestingly, the weekend saw the publication of Warren Buffett's latest gold price forecasts, which are remarkably bullish for this usually cautious economic forecasting team. So they're saying that usually this is a team that never is bullish on precious metals. They're extremely cautious. Same with the Silver Institute, actually. The Silver Institute never does price forecasts, but they actually said silver would be above $21 in 2021, which is crazy. They assessed 3 gold price forecasting scenarios, a pessimistic case, a median case, and an optimistic one, and apply an assumed weighting to each of these scenarios. This allows them to come up with a weighted average for the quarters moving forward, to which they add a small amount of assumed geopolitical influences. The net outcome of their latest forecast is an average gold price of $1,861 for the year's third quarter and $1,966 for the fourth quarter. And that's crazy. It demonstrates how bullish the new estimates actually are. Indeed, the $1,966 estimate for the fourth quarter suggests that at some stage during the quarter, the gold price will comfortably exceed the $2,000 spot. A more detailed analysis of the Warren Buffett predictions will be published in a subsequent article. So, if gold breaks above $2,000, that's going to be astronomical for precious metals. Not only gold, but silver as well. Because think about this. That's the highest gold price has ever been. And if gold breaks above that, the sky is the limit. If silver breaks above $20, the sky is the limit. Why, Silver Slayer? Well, because of these investors, right? We talk about supply and demand, but the everyday individuals, the people that shot Bitcoin up to $20,000, can influence markets dramatically, especially a small market like silver. Think about how much attention gold and silver would get if gold broke above $2,000, setting its all-time record high ever. Everyone's going to be trying to get a piece of the pie in the precious metals world. Everyone's going to. It's going to be like Bitcoin, and I keep referring this to Bitcoin because that's something that we can actually comprehend. It's not an example. It's not just a theory. It's an actual example. So if silver breaks above $20, especially if it breaks above $21, which is the highest has been, the last time we saw $21 silver was July 2016. Before that was September 2011 when silver was $50. So if it breaks above $21, that will be in 10 years, that will be the highest we've ever seen silver's price. Everyone's going to be talking about it. Everyone's going to be wanting to get their hands on silver, especially since silver is cheaper, more affordable than gold. So the price has been outperforming gold in percentage terms for the past few weeks, with the gold to silver ratio coming back to between 93 and 94. Still historically a high level, highest bad for silver versus gold. And we do not preclude that the ratio coming down a few more points to 90 or less, although we don't see it dropping a great deal lower. But the volume of silver going into the silver ETFs remains hugely elevated, suggesting some of the big money may be anticipating a bigger ratio fall. But taking the more and build forecast at face value, this would suggest that with the ratio at 90, silver will average $20.68 in the third quarter and $21.84 in the fourth quarter. That does suggest that silver is now a good investment bet, and with the chance that the ratio could move down further, along with a rising gold price, silver has to be a good investment gamble, even at current prices. As with gold, the downside risk is fairly limited, particularly compared with that where we see a hugely inflated general equity market. So they're saying that within the fourth quarter, we're going to see $21.84 silver. Remember what I just mentioned about attraction? It's going to look attractive. If you're still skeptical on precious metals, really think about this stuff. Really think about it. I talk so much about diminishing supply, rising demand with 5G technology, why silver is needed so much in the economy as an industrial metal and a monetary metal. So many things. I talk about manipulation, but no amount of manipulation, no amount of spoofing can hold this back. The bubble will burst, and like this article said, shorter or sooner than later. And what that's going to do is drive a lot of investors into precious metals. The producers will turn into the consumers will turn into the producers. Right now, we're the ones buying $18 silver, $19 silver. We're going to be the ones selling it at $50. Most people are going to be buying it at $50 because that's when it's going to be rallying. That's when everyone's going to be talking about it. And that's when the person that has not even a single ounce of silver wants to get in, thinking it's going to keep going higher. Just like this article said with Tesla. Most people are buying Tesla right now after it's already exploded. You should have been buying it a couple months ago, or a couple of years, about a year ago, when it was cheap. But these people aren't doing research like we are. These people don't see the bigger picture. Got to get in before the curve. So gold and silver mining stocks perhaps offer the best opportunities for some substantial investment gains, though, should gold and silver prices continue to move up strongly as the more and build forecasts predict. Again, downside risks would be reduced by sticking to the gold majors, which offer relative safety in their geographical and numeric diversifications of mining operations. They mostly also pay dividends, which offer ongoing income too. The second quarter financials are beginning to come out over the next few weeks, and we should expect some very positive figures given the rises in metal prices between the first and the second quarter. Quarter three is off to a hugely positive start, which too bodes well for stocks going forward. So I wanted, and this article was written yesterday, so it's fresh off the press and it's very relevant. So I really hope that you see this, and I wanted to show this as well. This is where precious metals usually would drop, but we see some resistance, we see the support, and this is people buying up. This showcases, and let's go to the 3 month. This showcases that silver actually has some value, and people actually view it to be this level, or view it to be worth this much, right? Not even 3 months ago, we were seeing $15 silver, and now it's up to almost $20. Think about in the next 3 months where it could go, especially if it breaks through $20, it could double, triple this percentage rate. So I hope you enjoyed this video. If you thought this video was educational, informational, or at least just entertaining, make sure to smash that like button. Make sure you subscribe. I post daily videos. If you love precious metals, make sure to smash that like button. If you are bullish on silver, smash that like button. Make sure you subscribe. We just broke 28,000 subscribers. I cannot thank you guys enough. I'm going to wrap this video up here. Like I said, the link to this article from FX Sharpixley will be in the description. This was Silver Slayer. I'll see you guys soon. Peace.